Hello, and welcome to the second Dojo Live show of the week, this Wednesday, January 25th. My name is Kim Lantis, and it's my pleasure to be co-hosting along with America Guerrero.
Hello.
Hi, America. Good to see you as always.
Yeah, this is my last show before I go to vacation, so it's going to be
Vacation. I
exciting.
know, I love it. And of course, the guest of honor, the most important person today is Sunil Madhu, I believe, who is the founder and CEO of Instnt. Sunil, thank you so much for joining us today.
Thanks for having me, Kim. Nice
Yes,
to meet you as well, America.
you're hunkered down there in the cold of New York, but yes, hopefully we get to take your mind off of it as we have a cool conversation this afternoon.
I'm going to imagine I'm in Mexico along with you guys.
Yes, you should be surprised. It gets cold inside. But yes, that's not the point. What we're talking about today is arbitraging. Arbitraging and securitizing fraud risk in the market. But before we talk about that, we really would like to get to know your story a bit more, Sunil. If you could please share a bit of your background, your passion, and what's led up to founding Instnt. Thank you.
Sure, Kim. I'm a serial entrepreneur. I've been operating in the risk and compliance industry now for about 30 years. Instnt's my sixth startup. My most recent company was a business called Secure that I started in late 2011. And I operated as founder and CEO for about 8.5 years. And Secure is a leader, a unicorn in the fraud prevention and digital identity verification space. The work I did in Secure kind of led me to look at the problem that I was trying to solve in a different way, which led me to Instnt.
Wow, great. Sixth startup, and here we are, successful as ever. I love it. Well, thank you. Let's talk specifically about Instnt, continuing in the security space. But who are you exactly? What's the problem you're solving for your users?
Instnt's a customer acceptance platform for businesses. Basically, we help businesses sign up and accept more good customers without worrying about compliance or fraud loss risk. So in essence, every business needs to grow by signing up new customers. We make it easy for these businesses to make sure that they're converting those customers that they bring to their doorstep online through marketing and advertising, to make sure that all of those customers get converted to help the business grow their top line revenue. And at the same time, we help the business shift the risk of fraud loss off their balance sheets. We uniquely actually do this in the market to collectively pool this risk that every business is managing on their own with a lot of cost and time and trouble. We want to make it easier for these businesses to focus on growth. And so we help those businesses externalize this problem of managing fraud and fraud loss with our managed service.
Nice. And I imagine with a name like Instnt, it must be extremely easy to set up and do. And I think we'll dive into that in just a moment. So let's talk about the topic of today's show and the questions we're hoping to answer.
Yes, today we're going to talk about arbitraging and securitizing fraud risk in the market. How do today's businesses manage fraud and compliance risk, and why are such approaches causing financial exclusion for the future demographic? So please share with us why this topic is important for today's show.
So every business has been going through digital acceleration, especially after the pandemic. More people are online than ever before on mobile devices and the internet. And this is an actual challenge for businesses. You'd think that the internet's been around for the last 20 or 30 years or more, and this shouldn't be a problem. But businesses struggle a lot with the way customers are accepted online. And the reason for that struggle, which is getting increasingly worse, is because the demographic has changed in favor of young people, millennials, Generation Z, and then Generation A to follow them. Young people grow up in an on-demand economy, and they haven't been spending a lot of money in terms of credit availability. Most of them sort of get services by renting them on demand, using apps on the phone. And so, they want those services pretty quickly without friction. Unfortunately, the traditional infrastructure that businesses use to sign up and accept customers have involved aggregating a lot of different point solution vendor tools and data broker solutions in the industry. And the way these tools are basically employed in what's called orchestration waterfalls, basically a specific order of calling different vendors in a flow when the customer signs up, and the user's data is basically passed by the business to these vendors for verification, to make sure that they're compliant with regulation, such as anti-money laundering, know your customer regulations that every financial institution has to comply with, and to make sure that there's no fraud risk potentially from someone using a stolen identity or a synthetic made-up identity. These are all, concerns, and unfortunately, the way that these tools and these toolbox and waterfalls have been used historically ends up resulting in a lot of these young people who don't have that spread of information in the traditional databases and so on, that are looked at by the traditional legacy infrastructure. And as a result, a lot of those young people get classified as potential fraud risk merely by not having enough history online and in terms of credit. So this is a growing problem. It's excluding the future generations. Millennials outnumber the previous demographic of baby boomers and Generation X, and they're seeing the largest transfer of wealth in the history of America. And so every business basically wants millennial customers who are going to drive the economy for the future. And the legacy systems that are being used by these businesses just won't do the job. More importantly, when fraud happens, no matter how good or bad the business's approach and tools, they end up holding the fraud loss liability at the end of the day. In large banks, that could be billions of dollars of capital that the financial institution has to literally set aside for a rainy day in terms of capital reserves. For early stage and growth stage companies, the challenge is essentially to be able to convert more customers, but to do it cheaply, especially in a recession, and to not subject the customer to a lot of friction. So these are ongoing problems in the market caused by the legacy approaches of piecing together a variety of point solution vendors to solve the problem. I was solving this problem in my previous company, Secure. I was doing a pretty good job of it, but then seeing the problem from the customer's perspective day in, day out, made me think about the problem differently over the years, over the last decade, that I grew Secure. And so I decided to start Instnt to solve that problem by taking the management of that problem away from the businesses, giving businesses the opportunity to essentially take the fraud losses that they have to deal with today off their balance sheets.
Nice. And I think it's not just, correct me if I'm wrong, but what comes to my mind too, not just the future demographic in terms of age, but I look at the United States also as a melting pot. I myself am an expat. I'm an American citizen, permanent resident in Mexico. And even immigrants, like legitimate people with, legal and working their way through, haven't had a chance to have, build up this credit history or whatever it might be. Heck, I even, as a U.S. citizen, do not have a bank account. I closed it 20 years ago, tried to open one up recently, and I can't because I cannot prove my residency,
you are who you say
which is so silly.
It is silly.
So, this is fantastic that you're able to do this. I think the user perspective is what opened it up. Ultimately, it's also the businesses that you're working with, right? So
That's
who's benefiting from this, or how does this work? And let's get back to the name of the company, Instnt.
Yeah.
How easy is this to set up?
It's meant to be really easy for the customers to use. And you're right, we sell to businesses. We have a joke. It's so easy to use that we didn't need the letter A in the word instant. It's that fast, So the way we've designed the solution is very passive. Businesses can deploy it literally within an hour or less. It works a lot like Google Analytics, if you're familiar with that tool. Essentially, it's a line of code that gets deployed onto the pages on websites and in mobile applications. And when someone goes through that business's sign-up journey and basically supplies information, most financial institutions, for example, when you're trying to open up a bank account, will ask you for your name and email address and phone number and social security number and so on. So as the user goes about providing that information passively, our system sits there in the background and it essentially filters out all of the bots and Trojan horses and malware and a bunch of automated attack vectors are used by fraudsters to attack hundreds of businesses simultaneously. So it's a little known, thing, but fraudsters don't typically sit in front of a particular website typing in hundreds of stolen IDs. It's a waste of their time. So they typically run a script and they'll attack 100 banks or 100 e-commerce companies simultaneously, right? So the first job is to act as the primary line of defense against that type of attack, to identify that it's not a human actor, or perhaps it is a human actor who's copying and pasting stolen identities, and to stop all of those type of kind of signups, right? And so that leaves the legitimate user, legitimate human being or customer that's now going through the sign up flow. And then our job is to make sure that the information that they supply online is actually valid and verified, and to cross-reference that information to make sure that individual is not a sanctioned entity or a money launderer or terrorist that's trying to enter your system. So we essentially filter out any sanctioned entities or politically exposed people, any other kind of compliance risk for the business. And we then process our own fraud models, which are machine learning and artificial intelligence models that quickly let us know if letting that user in is going to cause a problem or not. And all of this stuff happens in about a second. The businesses get to sign up more good users as a result.
One of the biggest challenges that I have learned in this show when we had the conversation with Samsung is that identifying deep fakes
Right.
created with smartphones, it's getting harder to identify. How do you step ahead of that kind of challenges?
Yeah, first off, we don't prescribe the ways in which businesses should verify the individuals. That's really up the user journey, the user experience. That's specific to each business. Often it's a competitive difference. So businesses are free to choose whatever user journey they want to use. And if that involves facial recognition and that involves requiring the user to use their mobile device, etc., then obviously we will support that. We already support providing digital driver's licenses and passports as verification of people, in addition to just using people's names and email addresses and phone numbers and passive mechanisms that are less frictionful than asking the individual to go on video. In terms of being able to identify deep fakes, it is definitely a growing challenge. With the advancements in AI today, it's very difficult to believe anything you hear or see on the internet, really. But we've developed some technologies that show that when deep fakes are created by AI, for whatever reason, they don't get the reflections in people's pupils, right? So there are mechanisms today that actually rely on examining the video to see if the eye has the right reflections like a human eye would, and on that basis decide whether the face is a deep fake or not. These are just general kind of improvements in the industry. We are kind of agnostic at Instant to the mechanism that's used to verify. So we will verify any kind of information as part of their business requirements to onboard the user, and we provide a variety of tools that allow businesses to do facial recognition or document verification, etc., at their choice, basically.
That makes a lot of sense. I'd like to take it back to the question of the future demographic and
Yeah.
maybe ask the question of why it matters. I think you really hit on just in terms of numbers, millennials being larger than the boomer generation and
Yeah.
things like that. But let's get back to the why. Like, why should businesses really be paying attention to how they're managing their fraud and compliance risk in a much more active way other than this? This is the way it's always been done and it's worked so far.
Yeah, traditionally, businesses have not had an ability to hand over the management of fraud risks to someone else. That's just not been possible to do. There have been niche use cases, for example, in e-commerce. Over a decade ago, there are several companies that help merchants prevent e-commerce fraud. And the credit card networks do a similar thing where if you use the technology provided by that credit card vendor or the credit card network, then the merchant no longer has to worry about owning the fraud loss. But no one's actually been able to do that for people opening up new accounts who you're seeing for the very first time. They're knocking on your door, right? We're the first company to pioneer that. Why are we doing it? Well, the problem of fraud is universal. Every business is being attacked by the same fraudsters using the same stolen identities and the same fake IDs. Hundreds of these businesses have been simultaneously attacked. The businesses, meanwhile, are going after the same consumer base, the citizens of a particular country, for example. So it makes no sense to me that businesses have to fight fraud in silos of business units, reinventing the wheel every single time. So we're providing, for the first time, the ability for businesses to solve for fraud in an entirely different way, which is to have it insured and give the problem to someone else to solve. So you can use your resources to focus on growth, revenue generation. And the other thing is, we're in a recession economy. And as you know, every business is tightening the belt. They want to do more with less. AI and automation is increasingly enabling businesses to improve profitability, reduce cost. So it's as part of the economy to be able to not have to bear the cost of fraud losses unnecessarily, or to spend resources that are limited trying to fight fraud, which I would argue is normal. Fraud is normal. It is not abnormal, right? So I think there needs to be a change in the industry, and by arbitraging and pulling this risk out of the businesses, pooling that risk, we're able to essentially, I think I've lost the light here. We're able to help businesses onboard these users much better, much faster.
I think that makes a lot of sense. I mean, what it makes this analogy that I'm hearing is it's definitely much more proactive than maybe a more traditional sort of reactive approach, right? So there's this tendency, maybe like fraud got in and we're trying to mop it up. And meanwhile, there's still the leak and water's still kind of coming in. And what you're able to do is go to that source and sort of, let's turn it off, or at least significantly make that leak less, rather than just trying to clean up a mess.
It is significant. Businesses typically spend millions of dollars owning the fraud losses on their balance sheet. They spend hundreds of thousands of dollars to millions of dollars a year just in the operational expense, bringing together a bunch of tools. And it causes friction in the user experience. Have you wondered why, as a consumer, you have to keep providing the same information for verification over and over again, and often to the same institution, just for different products that you want to buy from them? All of these inefficiencies happen because businesses are solving this problem in silo. And my argument is that businesses shouldn't be doing that. This is not a problem that businesses are good at solving in the first place. Fraud is always changing, and we are the experts at solving for that problem. So give us the problem.
That makes a lot of sense. What's your approach to get it out of the silo? Like, how are you integrating your machine learning, your AI, to maybe collect the data and what you're seeing in one vertical and how that can be applied into another? How does that work?
We're a multi-tenant SaaS platform. So we essentially process each customer's data in silo, but our machines learn across customers because we get feedback about what the fraudsters are doing across different customers, across these what would traditionally be silos. The other difference is that we've packed a bunch of different types of technology that are traditionally not bundled together. So we've sort of combined technology that would typically fall into the security world, which are required to essentially stop bots and malware and other types of automated attacks, along with verification of data and KYC verification, which is typically what's done in fraud prevention and customer onboarding. Most businesses typically cross-reference information about you across different vendors. So they'd reference your phone number and email and your address and so on, and they would check that those pieces of information are essentially matching in various different vendor databases, like phone company databases and credit bureau databases and so on. And that's not sufficient because so much data, in fact, something like 3 times the US population's data has already been stolen to date. So there's so much information about us that have been breached from all the businesses we use, that it's very easy for a fraudster to go and fake an account with our information, or just make up a completely non-existent person's identity and attack hundreds of institutions today. Okay.
Yeah, I think let's talk about this in terms of what about, I believe it's called the false negatives. What happens in your case if this person's legit, but they're not able to break through, or in terms of numbers, like how much fewer false negatives are you getting in your instance with Instant? And then
It's a
what's
very good question.
yeah.
A lot of businesses walk that tightrope between how many genuine bad people, genuine fraudsters they're able to stop, versus how many good people that they're stopping for the wrong reasons, right? And that's loss of potential revenue for the business. So we're actually adept at saying no to fewer good people and eliminating the fraud. And the way we do that is, first off, we don't look at fraud like the rest of the market does. Most of the market typically looks at fraud as a binary thing. You're either a fraudster or you're not a fraudster. And if your data doesn't match up in all of the different databases, guess what? You're going to be looked at as a fraudster, right? Not someone with little traditional history, if you will. So we don't look at the world that way. We don't believe that all fraud is created equal. We believe that it's not really the fraud that you got to worry about, but the losses. So if you're selling different products, let's say you're selling gold bars and you're selling paper clips, fraud being normal will affect the sale of both. But you really care about the gold bar losses more than the paperclip losses. So our system does this optimization of expected loss value. It's called value at risk reduction, which is something unique to what we've built. It's part of our secret sauce, our IP. And it allows us to make actuarial decisions on whether to let an individual in or not based on the potential loss. And in many cases, we're able to say, well, if the loss is like a paperclip loss probability, that's fine. We'll take that risk, right? We'll stop the gold bar losses 100%, but we may accept some paperclip losses. But by doing that optimization, we're able to say yes to more good people and say no to fewer good people. So we essentially reduce those false negatives or false positives depending on how you look at the problem.
That really is a refreshing perspective. And I think we've had several shows here on Dojo Live in the security and identification, but I think it's the first time that I've really hit so home and that fraud is inevitable. I think there seems to be this push to just stop it, instead of being like, okay, like this is going to happen. This is a reality. It's not going anywhere.
That's right. And it's evolving, and the fraud is diversified. There are different types of fraud. And a lot of the fraud is actually manageable. I've proven that with my previous technology that I invented for my previous company, Secure. I'm doing that again at Instant. And machine learning as well is a great tool to stop a lot of these types of fraud. So my thought is that it is great fraud to pull by pulling out of individual businesses. And that allows us to securitize that fraud and essentially trade insurance futures backed by the insurance coverage for these different types of fraud.
Yeah, and I think your money is where your mouth is, right? With the insurance you offer. America, go ahead.
Yes, I saw on your website that there is fraud everywhere, in finance, gaming,
Everywhere.
crypto, everywhere.
Yeah.
Which one is the hardest to identify?
I would say the most difficult type of fraud to identify that affects the entire industry is first-party fraud. It is the type of fraud done by genuine people who wake up one morning and decide to defraud your business. So they will provide their own information, all genuine stuff, and they'll take a loan or a credit card, and then they'll go shopping or spending that money, and then they'll say, oops, I lost my credit card. That wasn't me. Or I'm not going to pay the rest of this loan back. I'm just going to keep the money. 10% of every consumer receivable from loans, according to the federal government, is lost to first-party fraud. That is, 10% of every loan essentially is written off to first-party fraud, and there are trillions of dollars of consumer receivables across financial institutions, banks, and fintechs. So I would say that that is a largely unsolved problem in the market. How do you predict someone's psychographic behavior that they're going to wake up one morning and decide to defraud you? And then there are types of fraud that are sort of that are across industry. Synthetic ID fraud is across industry because you can just generate a fake ID, fake name, fake email, fake phone, whatever, and then you can go about using that fake identity, feeding that in to create new accounts in practically any industry that doesn't verify people's identities properly. If you look at Twitter, Facebook, etc., they all have the same problem. I can pay $8 to Elon Musk, to go get a Twitter blue check mark, but that means nothing because I could be using a completely fake ID to establish that identity. The other part is several billion bits of genuine identity has been stolen. So there are 7 billion records that you can basically go and pull from the internet practically for free to then take people's genuine data, stolen data, and feed that into hundreds of businesses. So it is incredibly easy to commit a lot of these types of fraud, and the digital landscape makes it that much more easy. And it's truly difficult for a lot of businesses to stay ahead of the ingenuity of people when it comes to committing fraud.
Yeah, that's a really good way to put it. Ingenuity of people. Although I think we just kind of start to rotate and repeat the same things, which is why you're able, I think, to learn from it. I am really interested. Are you working toward I used a word that I can't repeat, but the psychology behind it with the machine learning and everything else to better predict who these bad players might be?
That's exactly right. So machine learning learns, but in terms of feedback. So we get feedback from our customers periodically about which of the customers that we accepted for them, that we processed and verified, remained good, and which ones ended up committing fraud. And that feedback loop constantly trains the machine to understand the characteristics of different types of fraud.
Fantastic. We're coming to the final 2 minutes, really, of the show today, Sunil. And I'd like to get back to this being your sixth startup venture, the success that you've had. What would be your words of wisdom to individuals like you who are looking to start a business and all of this time? What have you found that's worked very well for you as an individual? And what maybe is something that you would totally counsel people not to do in their entrepreneurial ventures?
If people equate entrepreneurship to money and wealth, I would say that's the wrong reason to go into entrepreneurship. It is incredibly challenging. It is incredibly stressful. It's far easier to work for someone else and be part of a cogwheel in a larger machine where you get your paycheck week to week, month to month. It is much harder to start businesses, and businesses that can scale, especially, which take decades. There are businesses that have been around for 200 years. So just imagine what must have been going through the minds of the entrepreneurs who started Wells Fargo 200 years ago when it was a horse-driven carriage company, not a bank. So it takes some fortitude to help companies last that long and build truly good businesses, which I think is underestimated by a lot of people. But if you like challenges and you want to learn more about yourself, and you don't give up easily and you persevere, then entrepreneurship might be a very good, fulfilling career choice for you. One thing I would say that I've learned across the different companies is in life, we learn from failure, but in business, we learn from success. Because in business, failure happens. No one knows the future, so you can't guarantee everything. Every decision that you make is going to be successful. In fact, data will probably show you that most decisions that are made end up in some form of failure. So you should just accept failure as normal and not be worried about it. And then when things that you try out work, those are things you can repeat. You can use that method over again, or that process over again, or that technology over again, because you know it's worked successfully for you before. Yeah.
It's beautiful. It's like the inversion of your approach toward fraud, right? Fraud is like, I want to stop the gold bars, and the paper clips are okay. And in your entrepreneurial venture, it's like the gold bars of success are what I'm going to go after, and I'm going to ignore the paper clips.
I mean, you can't focus on, I like to tell people, with every new startup, I make new mistakes. I find new ways to fail because there are so many differences in each new company and each new product. So failure is normal, and you learn from success.
Well, thank you. Thank you so much for your time today, Sunil, for sharing your own story as well as the Instnt story with us here on Dojo Live. We wish you and your company nothing more but success as you continue to take down the fraudsters. Hold on just a minute as we go off air. But before we do, America, what have we got coming up tomorrow? You're welcome.
Yeah, tomorrow we're going to talk about legacy modernization in inevitable path for all banks. How are successful banks relying on next generation core systems to outpace their competitors? This conversation, we're going to have it with Rodrigo Merlato, Vice President of Sales at the company Pismo at 10 a.m. Pacific.
All right, awesome. Thank you again, Sunil, and everyone else. We'll see you tomorrow.
Thank you for having me. Have a great day. Bye now.
You too.